Hey guys, it's Lyons over at Continuum Ag. Just wanted to go over briefly some of the details on R&D tax credit. That's research and development. In recent times, we've been pushing significantly harder on it. There's some good developments that have happened with the big beautiful bill that passed back in July. And so far, we've had great success with the growers that we've gotten into it so far. But for some examples of management practices that would qualify, these would be things you're doing new to your farm, does not have to be new to industry. Cover crop trials, so either planting a new cover crop for the first time or switching from a single species to a multi-species, changing your rate, changing how you seed it, stuff like that. New hybrid variety, pretty straightforward. Doesn't have to be new to the seed company, just new to the operation. That's been kind of our easy button. A lot of growers plant a certain percentage of new hybrids or varieties on a yearly basis. Additionally, fertilizer rates and type trials. If you're trying to cut back on nitrogen or P and K or switching to a different product than you've been using previously, there's a play there as well. Biologicals, that's a big umbrella. There's a lot of different things that you can get done with biologicals, whether it be, fertility stuff, residue breakdown, doing something to reduce disease pressure. Equipment modifications, if you're doing anything to your equipment that's homemade or you're upfitting it for some reason, there's some labor costs associated with it, or just expense associated with the products that you're upfitting, as well as livestock health. This is really kind of a big umbrella. If you're doing anything that is developing new animal genetics, doing feed trials to boost animal health, medication sort of things, there's a lot of different plays there. All right, getting into a real world example, this kind of just goes over some of the, average kind of expenses, as well as some example management practices and numbers and stuff like that. This is just highlighting the federal tax credit. Depending on what state you farm in, there's some state level tax credits that can also be bundled with the federal stuff. But getting into it, let's focus on the corn side for now. $450 an acre. These are variable expenses, so inputs. Unfortunately, with the research and development tax credit, we can't include expenses tied to depreciable assets, so land, equipment, that sort of thing. We, on the 500 acres, get $225,000 in total expenses. In this example, we're going to do 30% new hybrids and or cover crops. You could be doing both on one field or one or the other. On the 30%, I say on the field, doesn't have to be the entire field, just on those acres. That gives us $67,500 in qualified research expenses. Those are what we're concerned about as far as taking the percentage that we get for the federal tax credit. The federal tax credit is 6 to 8%, so meet in the middle at 7%. That gives us $4,725 per year. This is the only year that the IRS is going to allow us to do a 3-year look back period back to 2022. And you can claim all of 2022 through 25 on your 25 tax year. That gives us $18,900 over the past 4 years, including 2025. You can claim these tax credits in 1 year. Let's just say you don't have a tax burden for 2025, for example. You can bank those credits for up to 20 years, wait for $15 corn or whatever might come about. Going to the bean side of things, same deal, $200 an acre in variable expenses. On this example, we're going to do a new variety and or a biological on 40% of the acres. That gives us $40,000 in qualified research expense, same tax credit, or $11,200 in the last 4 years. I mentioned some developments that we got with the big beautiful bill. Basically what ended up happening was previously you had to amortize these tax credits over 5 years. Now with this last year that they're going to do the look back period, you can claim all of them in 1 year. Do not have to amortize them like we did previously. But you can really get some fantastic numbers. I mean, this is great here, but couple that with the state level, depending on what state you're in, it can really make a big difference, especially this year. So as far as the workload goes from a grower perspective, our R&D tax credit guys are the best in the business as far as facilitating you through the process, making the arguments, collecting the data that's necessary to participate. They work with you strictly on the R&D credit side of things, pass off all the needed documents onto your CPA. Obviously, they're going to need some of your expense information and learn a little bit about your farm. But if you're interested in getting the ball rolling, there's a link in the description. Fill out a quick form, get in contact with us. We can kind of get the ball rolling, crunch some numbers as far as what this looks like on your operation, and go from there. But appreciate your time, guys. Thanks.